What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and today I wanted to discuss about this idea of reacceleration of inflation. I saw a tweet today from a well-known macro guy, Jim Bianco. So I wanted to read that, dive into some of the charts, look and see if we are seeing a reacceleration of inflation or not. We do have CPI coming up next week, so we are staying tuned for the actual numbers. But let me share the screen and jump right into it. Of course, always start with Bitcoin and markets.com. That's where you get all of my content. I'm working right now on a Proton. That is the premium newsletter that I put out. Here's an example of the last one I put out. Talk about all sorts of stuff. We looked at this one actually really quickly on another episode. But check out bitcoinandmarkets.com. You can be a free member and just get the free weekly newsletter and, notifications when I drop uh, the podcast versions of these live streams. And if you become a paid member, you can join the monthly price forecast competition. The deadline for this month is up, but every month we open it back up for the next month. You get to guess the closing price for the end of the month, and the closest person wins $20 in sats. So that is uh, a cool perk, a chance to win back your membership cost of $5 a month. Cover that with winning this price forecast competition. All right. Let's also check out bmpro.substack.com, writing for Bitcoin Magazine Pro, and had one come out this morning that I'm pretty proud of, and I hope it gets some traction here. So the evolution of Bitcoin investments, Bitcoin equities are the new altcoins, and dug into Coinbase, looked at its performance against Bitcoin, what I think is going to happen with Coinbase, other equity alternatives. This is what I'm calling them, equity alts instead of altcoins or alt stocks, trying to come up with a name for them. But these are equities that are related to Bitcoin, right? MSTR, Coinbase. Of course, you got Marathon and Riot and all the public miners, but you have other companies too. TSMC is one. And actually, let me go in. So I did pick this out. I'll give you a little behind the scenes on writing this week's Proton. And this is what I came up with here. So this is just a spreadsheet, simple spreadsheet that I snap a screenshot of. But these are the Bitcoin equity alts that I picked out. So CleanSpark, TSMC, because they supply the ASICs for Bitmain, and I believe Canaan, the two of the three largest ASIC or mining rig producers for Bitcoin. So even though that's not a big part of TSMC's business, it is related to Bitcoin in a way. MicroStrategy, of course, the 2x Bitcoin strategy ETF block. I couldn't find IBIT. I was going to put IBIT on here, so I just put the futures ETF BITO, Coinbase, Valkyrie, Riot, Marathon, Canaan. So I just put some of these Bitcoin related stocks on there, and then compared to Bitcoin's performance, how did they perform today? So I thought that was kind of interesting to start looking at this as a, Coin Market Cap has Bitcoin and all of the shit coins. Well, these are kind of the new altcoins. And so they're I think that'd be cool to have a website of Bitcoin and Bitcoin related stocks and all of their performances. So that's kind of the thought process I'm going into with that. And also, that's what I wrote about on BM Pro, and talking about evolution, how this is evolution from altcoins into equities, and my conclusion. So check that out, guys. And if you are subscribers to this, the paid Substack here, give it a like, please. That helps share it out to more people. Okay. Now let's get into this tweet that I wanted to discuss. And this is Jim Bianco. Not a huge fan of his, but he does have 350,000 followers on Twitter. He's constantly being interviewed by different macro outlets, including like CNBC and those types of things, even though he's been horribly wrong on his calls over the last 6 months to a year. He is a popular expert out there. But anyway, so he's talking right here about the daily national gasoline prices. And you can see they're ticking up here. This is from AAA Motor Club. So that we'll take a look at some macro charts, and we'll take a look at the gasoline futures, US gasoline futures. It doesn't look like this, but this is from the AAA Motor Club. And what he's implying here is that we're going to get a reacceleration of inflation. Okay, so higher gas prices um, will trickle down to all other prices because everything has to be transported to some destination somewhere or have energy made used in the production of that item, right? And so there is this gasoline price in everything, and if you have higher gasoline price, that should make all prices rise, and that's what most people think of as inflation. Now, before I get started here, if you guys are new to my content, um, I am very, very strict on the definition of inflation and deflation. So, inflation is an increase in the money supply. Deflation is a decrease in the money supply. Most people call everything, all price increases, inflation, like Jim Bianco is doing here. Okay, so if prices are going up, that's inflation, but it's not inflation. Okay, it's actually prices going up here can be deflationary. And my guys on Telegram are going to hear me do this twice because I talked to them earlier about this exact same thing. But if uh, if gasoline prices go up, but there's no increase in the money supply, then that squeezes people's wallets. Okay, it decreases just spending elsewhere in the economy, and because the uh, elasticity of demand for gasoline is quite inelastic, that means it's not sensitive to changes in price. Okay, most people are going to have to grin and bear higher gas prices because they have to get to work, they have to get the deliveries made, they have to do all these things, and so it's very inelastic. That means they're going to have to cut back elsewhere, and so there's going to be lower demand elsewhere in the economy. And when you have lower demand for something, price tends to fall, right? If demand is falling relative to supply, you have prices going down. So if gas prices go higher, that doesn't necessarily mean that the price level is going to go up because people are going to have demand is going to be sucked away from other things. Also, if demand goes down, there's less volume, there's less trading in those businesses, and they won't be borrowing money. Individuals won't be borrowing money. Small business won't be borrowing money because they're tightening their belt because it looks like the economy is uh, going into a bumpy patch because demand is falling. So debt credit creation. So I've tied this in. Higher gas prices will lead eventually to lower credit creation, which is deflationary. It's actually deflation, not deflationary. It's deflation. Less money printing on net is deflation. And so I get I get bothered a lot by people saying the price increases are inflation when actually a lot of these things, especially a supply crunch or crisis or disaster like we had with COVID, that is actually a deflationary event that leads to eventual deflation. Okay. I don't know where else to go with that. But all right, let's take a look at a few macro charts and see if there is actual deflation coming. Because remember, um, it's not going to be like one thing in the economy is going to go up. If we're having inflation, we should see it in most of the commodities and the bond market. We should see in the bond market and commodities. So let me just say this a little bit more about this. So the if we have higher inflation, that means there is more net credit creation. Which what does that mean? That means there's growth in the economy. People want to go out and borrow. They want to go out and invest. They want to go out and expand their business. They want to do some home remodeling. or something. So there's net credit creation, which is inflation, right? And so there's inflation in the economy. Um, and we're going to see that in all the prices. I forgot where I was going to go with that. We're going to see that in all the prices of commodities and everything. Okay. We can't just have one thing going up, causing inflation fears. Even the price of housing. Let's say gasoline and housing is going up. That's not enough to make the entire economy um, expand. Okay, just because we have asset price inflation doesn't mean the entire economy is going to expand. So anyway, this is the Bitcoin chart. We'll come back to this in a second, but let's take a look at um, the U.S. 10-year because this is one of the big ones here. Um, I've been talking about this a lot over the last few years. I was surprised by this big top up here, but then we did say that it was due to this end of Q3 ramp, and even Jeff Schneider has talked about the September effect. Um, so I was thinking that this over here in August was going to be the high, and it looked like a good call for a while, but then it continued to go up. And then Jim Bianco actually up here at the high, he was talking to go, for it to go from 5 to 7% or something like that. But anyway, so this is because there is actual real inflation. Rates are going higher. Rates are going higher when there's real inflation because people can afford it. People can afford to pay back. They want to take out a loan to expand their business, and they know that I'm going to make 10% off this next year. I can afford to take out a loan for 5% or 6 or 7. If it's really good, and there's really good economy and I can make 50% on adding a new line in my factory, production line or something, then I would pay 20% for that loan because I'm going to make so much off of it. So growth and expansion and higher interest rates all go hand in hand. Okay, so if we're going down, a lot of times people think we're going down because they expect the Fed to cut. They expect the Fed to cut, so rates are falling. But that's not the reason. It's because fewer people want loans and fewer banks want to give out loans. So by this dripping here, dripping down from a high recently, if we go back to middle of February, is about 4.3 down to 4.0. That is not a sign of impending inflation. If we had it going like this at this point, that would be more convincing that this is impending inflation coming because interest rates are rising. That means there's more demand and there's more willingness to lend. Higher net credit creation is inflation, but we don't see that. We see the opposite. So, and we also see from last year, the last 6 months, it's a downward trajectory. So, all right, let's take a look at oil. Oil's just kind of hanging out. Does not look like it's a super inflationary period. And if we zoom out further, and I put this on regular because this log, you can see exactly how far away we are from these tops of the Russia invasion of Ukraine. I mean, this is a significant amount, guys. Um, peak cheap oil, right? We would have to go up 50% to get near these highs. And there's just been nothing for the last 18 months to show any sort of demand in that way. There's nothing in the oil chart that shows there's some impending huge spike in oil prices. You could say that this is kind of curving up here. Um, you could say that this is kind of curving up and it might take off, but then it's got all sorts of levels up here. Plus Saudi and OPEC plus, they have all this excess capacity. If they start getting up here to 90, they'll just remove their production cuts. And it also stimulates more production from the US. higher prices. So there's I don't see any path forward to go higher in oil prices. Okay, let's go to some macro stuff and let's take a look at copper. So this is Dr. Copper because he has a PhD in macroeconomics. I don't know why I laugh every time I say that because it's stupid, but um, uh, okay, so let's zoom out even more. Let's go to a monthly on Dr. Copper here. So this is one of those commodities that actually did make a new high in COVID. Oh, and guys, if you're watching on YouTube or Rumble, make a comment down below. I will answer any questions you have. Telegram, same thing, but you can do it over there in the live stream post. Okay, so I drew these arrows back probably in COVID, like as it started going up this way. um, I was like, okay, well, we're probably going to come up and do the exact same thing because this is a replay. Something broke in the great financial crisis. We are replaying the great financial crisis in a way. Um, and that's how all of these are going to go because of the nature of a credit based system. We're at the end of a credit bubble. The great financial crisis was just the first chink in the armor. And now we're going to have the next one. And how many more does it take until we change things? Um, Low growth and low inflation between these. That's what we're doing. So, but if you take a look at this, I mean, this is uncanny, the resemblance here. So if you take a look at this, let's just go from like right, let's just highlight this section. Okay. And that path would look something like this. So up, kind of double top it, then down, and then triangle. Okay. That's the pattern we're looking at. And it's the exact same pattern today. Look at this. We have a up, double top it, down, triangle, bottom half of the range. This is exactly like here. It's just an exact replay of this. It's amazing the fractal of this. So if this comes out, we are going to come down like this. Boom, 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 boom. Is that inflationary? Is that showing inflation? No, it's not. If inflation were going to pick up, it would probably have started curving. Let's see, I'll get a path. You know, it would have gone like this, something, something like that. I don't know. Or since copper is demanded by pretty much everything, modern technology and stuff, if the economy was booming, and that means, right, that there's net credit creation and there's inflation, then we wouldn't even have seen this consolidation down here. We probably would have been coming from here and going up because that is what more economic activity would do to the price of copper. All right, let's go to the next one. Let's check out what did I wanted to do here. So we can look at things like lithium. This is a new product, this lithium futures, I guess, from the COMEX. That doesn't look very inflationary to me. I remember watching this on the way up, and now it's all the way 100% retracement on this. How about nickel? It's another metal that's used. Um, I think don't they use nickel for like stainless steel or something like that, or chrome? I don't know exactly, but there is industrial uses here to nickel, and it doesn't look like it's pressuring price levels to go higher or that anything of the nature is going on. How about aluminum? Same sort of thing below this previous resistance all the way back here from 2019. Um, Below that, this does not look like we're in any danger of ramping up into a booming economy that's going to be causing inflation. All right, how about the Baltic Dry Index? This is the bulk goods, bulk commodities, things that don't fit onto those into those 40-foot containers, like on a container ship. So wheat or what else would they ship in this? Um, I don't know, any bulk commodity. And or we're still on the monthly. Let me go to the weekly and reset this a little bit. Yeah, that was COVID. All right, so I drew this kind of center line here that is there's some resistance here, you know. Then we broke through it, then there was support, went up in COVID. It's October 2021 at the high, or yeah, October 2021. Bounced off that line again, kind of zigzagged through here a little bit, and we've been under. Now, you could say that there is a little bit of higher lows, excuse me, higher lows going on here and higher highs. I mean, depends on where this comes out. So, yeah, I could say that this is Baltic Dry Index is one that is showing possible signs of higher prices throughout the economy. Okay. How about European natural gas prices? These are futures. Um, Remember the big energy scare here at the in 2022 with the invasion of Ukraine? Prices pretty much totally recovered. I would say, let's see, right now we're back to, let me put this on log so it's a little bit easier to see. Um, Bounced off these bottoms. This is interesting. But if I were to move this red line here instead, so I mean, this has the possibility to turn around, but it does not show that there is building demand, building stress right now in the economy for more energy, for that prices are going to go higher. And U.S. natural gas is even a bigger joke in this regard because um, we shut down the Hudson or Houston export terminal, and it has dropped 30% in this little bit here. So if you go like this down to here, I mean, it's dropped almost 50% at the bottoms. It was over 50% just in this year alone. And because this is on logarithmic, if I go to regular, I mean, it's just crazy. Zooming out here, look at this. This is pretty much the lowest prices on record, going back multiple decades here. So this is not showing any sign of inflationary pressure whatsoever. Okay, and last things, let's take a look at some agricultural commodities. So um, corn did have a pretty significant run that ended in 2022, but it is now down once again. Corn, big, it's in a lot of processed foods that we have here in the United States. Um, It's part of livestock feed and all sorts of stuff. So this is a a staple crop, and it's not showing really price pressures at all. Soybeans, similar, almost exact same chart. Wheat, of course, wheat had this big spike with the Russia-Ukraine thing, but it is now down and falling. So there's no price pressure in that in wheat. Cotton, it's agriculture, but it's kind of like a raw, I guess it's not food, but there's a little bit of price pressure here. You can see it's kind of starting to tick upwards, but this is just one agricultural commodity. How about live cattle? Here's another one. Now, this one, I'm from Nebraska originally. We have a lot of cattle there. And so a lot of my fellow Nebraskans might be getting rich off this rally here, but cattle is hitting an all-time high, which is pretty crazy to me. $188. I don't know what the units are for that, if that's a side or what, but um, Yeah, the price of cattle is breaking out. This could be for all sorts of different reasons. Could be, I know that the price of eggs and chicken went very high last year, about 6 months ago, because they had to cull a lot of birds in the United States. Maybe there's something going on with cattle as well. But this does definitely show uh, reacceleration of of inflation. But it's, again, one statistic. How about the hogs? So lean hogs, nothing really significant to report. There's lots of noise here in this price. You can't even really pick out any patterns. So that's the agricultural commodities. All right. So what did we learn? We learned that there is, throughout the economy, throughout commodities at least, and the treasury yields are not showing a reacceleration of inflation. They're showing pretty much the opposite, a return to GFC normal, and perhaps even a sliding into recession. That's what we're seeing. Okay, let's take a look at Bitcoin price. We'll go to the log scale, go daily, and see what I'm looking at here. You can see my vertical line, possible banking crisis at the end of Q1. I'm the only person that I know of that has been talking about this for multiple months, even going as far as to have a line on my chart talking about it for multiple months. This is uh, a big deal. And we see New York Community Bank, they're already starting to slip. I think their stock has lost like 80-90% in the last month. We have the end of the bank term funding program that's ending on the 11th, which I think is Monday. And the uh, there was some other tweets I saw today about the entire banking sector. Most banking stocks were down by a half or 1% today. So there is some worry out there. There is some contagion going on in the banking sector. And if we go back to how Bitcoin performed last year during the same thing with Signature Bank and Silicon Valley, we had this. This is where this came from. So the bottom is where they launched this bank term funding program, and Bitcoin rallied 40% off that. If we rally 40% today, that would be a pretty nice move. But yeah, that's one thing I'm watching. Of course, if you zoom out or move over to the right here, you have the halving. So there's lots coming up for Bitcoin that Bitcoin can do. But what about the actual individual price for today? Let's zoom it in. You see our top right here was the new all-time high. It hit, what was it? 69, where is it? High, 69,210. And I think on Friday I was talking about, or was it Monday? Yeah, it must have been Monday's live stream. I was saying, man, wouldn't it be crazy if it went to 69,200, got a bunch of people going long, going crazy, degen long at the top, caught them and dumped. And I think the price point I brought out on the live stream on Monday was 62,000. I had to go back and look at the actual report, what I put in my newsletter as a possible bottom on a retracement. But we did blow through that 62 all the way down to 59. I think we touched 58. No, 59,313 was the low. So it did break 60. And we have recovered. So what am I looking for now? I'm looking at this close. I'm looking at the daily high close right here. That's what I'm watching. And if we can break through there, I would want to see a close above that line. Which, where is that sitting? 68.4. If we can close above that line, I think we continue in an upwards consolidation. Now, I don't think we're going to jump to 80,000 like we did, in these big candles. I don't see that coming because we're too overextended still on the weekly. But I could see a consolidation in a diagonal fashion like this, taking us out nice and slow, rising like that. Um, if we don't break this level in the next day or two, we could dip and we could actually hit new lows. It wouldn't be any sort of damage whatsoever to the chart. Um, it would scare a lot of people. There would be a lot of weak ETF hands that get shook out, and I think that's healthy. So that's a possibility. If we don't break this in the next day or two, probably there's a possibility we see new lows. But anyway, okay, that's it. Let me go back to bitcoinandmarkets.com and I'll take a look at any sort of um, comments that we have here in the chat. Nothing. Dex Invictus is not with us today. All right, let me take a look at Telegram. Nothing in there either. All right, well, I'm not going to belabor the issue. I'm going to bounce out of here, guys. So thank you so much for joining me. Take care. See you on the next one. Bye.